Hello, chart watchers, and welcome to this Friday, February 15th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, well, taking a look at the market today, we're going to take a little different approach here. But you can take a look here. You can see a big chart here, the Dow Jones Industrial Average, currently breaking out very, very strong. Up more than 300 points today. S&P 500 also up nicely, up about 22 points. The NASDAQ up about 1/3 of 1 point, up 23 points today. So we're getting across the board strength. Russell 2000 have another very, very strong day. It's been a nice relative year so far for small caps, and they're continuing that today. 10-year Treasury yield down a bit today. Not too surprising, especially given the retail sales numbers from yesterday. Volatility index, after gapping up earlier, look at it making a big move down today, threatening to close below 15, currently down just below that 15 level. Financials having a strong day. I know banks, life insurance company, mortgage finance, all performing very well. Energy also making a big breakout here today, clearing the early February high, trading at its highest level in more than 2 months. And then we've got the industrials making a big move to the upside. Healthcare also, I think there were 4 sectors, healthcare being the fourth one, that was trading up at 1% or more today. So we are seeing it across the board. As we go into just these last two, I'm going to give you a couple of individual stocks. NVIDIA, remember they warned back here toward the end of January and gapped down, held the prior low though. They actually guided lower going forward. I think it was their revenues that they guided lower, but the market still, from a relief standpoint, we see a gap up today, so trying to take out that January high on NVIDIA. And then finally, the last one was Deere, DE. And you can see Deere gapping lower here today. They did come up a little bit short on their numbers. We'll talk about that in just a couple minutes. But you can see taking out the 160 level. That's somewhat significant short term, although Deere just recently broke out to a multi-month high, so relative to its peers, actually doing pretty well. So all in all, not a bad start to a Friday. It's been a nice move up here in the market, Mary Ellen. Mm-hmm. And I know when we get into what's hot, what's not, I have a feeling you're probably going to be talking about what's hot.
Oh, yeah. And you can see you're talking about those indexes. We got the S&P and the Dow up 2%, the NASDAQ up even more. It's been another strong week. Very interesting.
Yeah, it was very interesting indeed. I know one thing that I'm a little concerned about is anytime we get into that third week, the end of the third week or the third Friday of the month, that's options expiration. And when we've such a strong run up like we've had here, I am a little concerned going into next week with options expiring. Historically, the 19th to the 25th has been the worst week of the year. It actually or worst week of the month, I should say. And it actually has produced negative annualized returns of about 6% on the S&P 500 since 1950. So
wow, that's significant.
Yeah, I mean, because we're not just, you might think, well, it's just 6 days. Well, it's not just 6 days. It's 6 days every month, going back 69 years. So there's a lot, it's roughly about a quarter of 20%, 25% of all the trading days. So there is a history of next week being down anyway. And because we've gone up so much, I think that it behooves market makers potentially to bring stock prices down next week. So I'm a little concerned going into next week.
Wow.
But we'll see. We got a lot we're going to go over and talk about. So let's get through the schedule today and today's agenda. Talk a little bit about what's going on in the market, some earnings. I know Mary Ellen's going to share something with you, which I think you'll enjoy. And then we'll get into what's hot, what's not. But coming up, I do want to mention on Monday, that is President's Day. Markets are closed, so we will have no live shows here on StockCharts TV, including Market Watchers Live. Erin will be back with me on Tuesday, so she'll be sharing her workshop with you. And then next Thursday, I believe, Julius DeKempenaar will be coming on. And as I mentioned yesterday, he was really excited when I talked to him about maybe doing a break it down segment, maybe an extended break it down segment where he could do a lot of looking at a particular sector, and we're thinking about technology, where he can show you on the RRG some things to focus in on. So I'm really excited about next Thursday's show with Julius. As far as today, though, we can't get too far ahead of ourselves. We got a great show today waiting for you. What's hot, what's not? Always our feature on Friday. Mary Ellen is here to go through an incredible number of stocks and some of the things that you need to be looking at, and not just the technicals, but also Mary Ellen likes to share a lot of the fundamentals. Then we'll get into the 10 in 10. FedEx Corp. FDX will be our first stock. And then we'll do under the radar. We haven't done it under the radar in a while. So Mary Ellen, I think this is your first time doing the under the radar with me.
It'll be interesting.
Yeah. So we're going to have some stocks that we feel, for whatever reason, are under the radar. And we'll share those with you later in the show. All right, let's jump into what's going on today. And there were some economic reports out this morning. So let's pull those up, take a look at them. We had the February Empire State Manufacturing come in better than expected. That was good news, especially after the bad retail report yesterday. January industrial production, though, and capacity utilization came out at 9:15 just before the market opened, and both were down a bit from expectations. But then finally at 10 a.m., we had the February consumer sentiment, which was much stronger than expected, 95.5 versus 93.0. So let's take a look and see what is going on in the bond market as a result. 10-year Treasury yield, you can see down, or excuse me, up 1.3 basis points today, 2.67%. Still in this downtrend. I'm still a little nervous about what's going on in the bond market. Don't quite understand if everything's looking good and the equity markets are perking up, trying to get back to all-time highs. Why is the 10-year Treasury yield still so far down below where it was back in November? And so if you're looking for more gains in the stock market, it just helps if there's a sell-off in treasuries to help fuel that move up in equities. And we're not seeing that right now. We're actually seeing the opposite, money rotating into the defensive treasuries. As far as earnings go, let's take a look. NVIDIA. So NVIDIA came out with their dirty laundry a couple weeks ago, warned the market, told them, hey, we're not going to hit our numbers. And they took, a little bit of a hit as a result. Well, I think there's a little relief rally today because NVIDIA did come in better than the lowered expectations. You can see 80 cents versus 75 cents. They did still come up a little short, though, on their revenues. Talk about that in just a minute. And then you can see across the board, a little mixed picture today. I mean, CBS came up a little short. Pepsi only matched. Deere, as you can see, way below expectations. Royal Bank of Scotland, well below expectations as well. So there was a mixed bag there. Arista Networks, obviously, strong report, 225 versus 204. But now it is time to take a look at the charts and see what the charts are telling us. So let's go ahead and jump into NVIDIA to start. Now, what I want to do, I'm going to go ahead and share with you the relative charts, because to me, it's not just about what a stock is doing, but also how it's doing relative to its peers, relative to the S&P, because a stock can be doing great, but on a relative basis, not be doing so great. In this case, NVIDIA did gap up today, cleared that 160 level, which I think is important. I thought it was also very important that on the warning, we did not take out the prior low. I think that's a good sign. And also, as I mentioned, they came up a little short on their revenues, $2.21 billion versus $2.22 billion, just a little bit of a miss. And then they guided their Q1 revenues lower. So this was not a slam dunk to the upside, but I think what the market is telling us is that NVIDIA may be sold out. The 290 level that we saw back in October, all the way down below 130 in 3 months. Was that 60% or so? I mean, that's a pretty significant haircut for a high growth company like NVIDIA in just 3 months. So I think the market is just trying to settle into this new valuation, trying to figure out, okay, was it overdone? I think the gap up today is an indication maybe it was, but I would like to see today's open cleared, which is at 162.95. I think when NVIDIA clears that open, I'm not going to say it's full speed ahead, but I think technically things definitely begin to improve if we can clear today's open. How about Applied Materials? Not a good report here either in semis, but once again, this is a group, or this is a stock, and NVIDIA the same way, that was underperforming its peers, wildly underperforming the S&P 500. So now a lot of really poor expectations built into Applied Materials. I actually like what it's doing technically today, even though it did beat on the top line, by the way, $3.75 billion versus $3.71 billion. beat on the bottom line, 81 versus 79, but like NVIDIA warned going forward. They guided their Q2 revenues and earnings per share lower. Gap down was down a little bit more earlier today than it is now. Stock down 3%, but it held its rising 20-day moving average, and it also held the breakout level where you can see that prior high was about 38.5. So I think this is pretty good action considering that the company lowered its guidance. So I'm not so sure a bottom isn't in, and we're beginning to trend higher on Applied Materials. I would watch, I'm going to go all the way down to about 37.50 gap support and this price support level. I think if Applied Materials can hold on to that level, then I think we go higher, despite the warning. CBS. All right, revenues $4.02 billion versus $4.13 billion. Came up short. Bottom line, $1.50 versus $1.53. Came up short. Stock up almost 2%. Sometimes you just scratch your head in the market, wondering what the market sees that we don't see. But if I annotated this, I would show you that it came right up to a key resistance level and failed. So this could be a head fake. You can see the big drop back in July. We came down, we tested it early September on heavy volume, bounced off of it. And then when we broke down in December, you can see pretty solid volume on the breakdown. Now today is the second time we've gone up and tested this area, unable to get through. And CBS on a relative basis, not performing well versus the broadcasting group, not performing well versus the S&P 500. So this failure, you want to be careful. If we go back down and fail to hold the 48 level, I'd be a little nervous with CBS, given that it is an underperformer. All right, couple more here. Let's take a look at Arista Networks, ANET. Okay, ANET. Now remember, Cisco just reported, and they reported some pretty good numbers, got a nice gap up, and now here we are with Arista Networks doing the same thing. They did come out and beat top line, $595.7 million to $591.4 million. Beat the bottom line, 2.25 versus 204, and then they guided their Q1 revenue midpoint higher. So got really a trifecta here. Beat on the top line, beat on the bottom line, raised guidance, and you're seeing that in the technicals here with a gap up. Only problem, stocks made a pretty good move, and you can see this reaction high and even some of these prior lows right near this 260 level. So this is a key area to watch on Arista. It may pull back, but this is one that would be on my radar. I think if you get this thing to pull back, especially if it got anywhere near gap support and the rising 20-day moving average, I think your reward to risk here would be pretty solid. A couple other earnings that came out this morning. We'll just take a look at the technicals here. Pepsi did meet expectations on its bottom line, gapped higher. So pretty good action here. Overall, I like this move back to the upside versus the soft drinks group, its peer group. So it is breaking out, which I like. Versus the S&P, still in a little bit of a downtrend. Maybe if we can climb and get through this little reaction high, we're almost there. That would start to look a little bit better. But one headwind, the soft drink group is not performing well right now versus the S&P 500. So a little bit of a mixed bag here with Pepsi. I think if it got up to this 119, 120 area near the December or late November high, I'd be a little careful with it. Deere, wanted to bring this one up, mention this top of the show. Recently, we got a breakout on Deere. I'm going to come back to this relative chart, but I do want to show you the negative divergence on the daily chart. So here you can see we did actually close slightly above that mid-January high. And with that, you can see the PPO turning over. So now that we've lost the 20-day, I think we could go down on Deere to about this 155 area. There's your 50-day. I think that's where we could get a 50-day test and a potential PPO reset near the center line. And then if you go back onto the relative chart, you will see that Deere, relative to its peers, had been performing exceptionally well. Same thing against the S&P 500. So I think this could just be a little temporary pullback. 155, I think, would be very interesting. All right, I'm going to leave it there. I know, Mary Ellen, I teased everybody at the beginning of the show because I always, we get a lot of feedback here on Market Watchers Live, and I think that our viewers love to kind of get into each of our strategies and how we decide to pick stocks and so forth. So I know you wanted to go through and share a little bit of yours, so take it away.
Yeah, so what I'm going to do today is share an example of a stock that I picked up during the summer last year, and it's certainly we of course like to parade and show off our big winning stocks. This certainly is an example, and I thought what I would do is give an idea of what attracted me to that stock and where we can kind of pay attention and look at it where it is now. The company is LFVN, and it's called Life Vantage. And it's a smaller cap stock. I generally do tend to traffic in larger, more certainly liquid names, but this one caught my eye, and I'll tell you, I picked it up in here, and I actually remember it was the week of July 4th. That was a very slow week, generally speaking, in the broader markets. I was running screens as I always do. My work, I'm always on the prowl for that next big winning stocks. And as such, there are very similar common characteristics among these big winning stocks. So StockCharts does a great job in providing users with preset screens with a number of those characteristics. So let's go ahead and take a look. We're looking at a daily price chart of LFBN, and I'm taking you back to that July 4th. And what caught my eye back here during this period was a nice uptick here. You can see the stock is starting to pick up, and I like to pay attention to volume. I want to see volume in there. That's indicating interest, investor interest. Some of the bigger names, it's telling you that institutions are in there. And that volume is a precursor for my work as far as the potential future move for a given stock. So back during this period here, I was running and looking for stocks. Let's take a quick minute, and I can show you here on StockCharts.com. They're predefined technical scans. And actually, let me go back one more here. And up here we have, these screens are designed to help you get in front of these types of stocks. So you're looking for either stocks hitting a new 52-week high, strong volume gainers. And that was very similar to what I was looking at. I was looking for stocks that were up on volume, that were within that new 52-week high. So here we are, picking it up. And then from there, for my work, I like to go ahead and take a look at what might be driving the stock. What does the company do? Because believe it or not, the industry group that a stock is a part of is a huge impact. Studies show almost up to 2/3. You want to be in a group, an area of the market that's vibrant. This particular company is, they do multi-level marketing. Again, not an area that would, again, normally attract my attention, but for those of you familiar with Herbalife and those type of companies where they have individuals that sell their products. So LifeVantage, what they do is they have dietary supplements, anti-aging, skincare, weight management, and they were developed here in the US. But back here during this period, I want to see, well, what's the news? What's driving this uptick here in the volume, in the price? And the company had expanded out of the US and into the Asian markets. They opened Taipei. For those of you not familiar, the Asian market is super, super vibrant as far as cosmetics and skincare products, a very, very, very big part of the economy, certainly in Korea, but also Japan. So that intrigued me that they were entering into and expanding their presence in the Asian market. So I was able to put that together with earnings. They were starting to come in with triple-digit growth numbers, huge expansion. And so that's what got me into the stock. And of course, the stock did go on to advance. And a lot of times you'll see these stocks have these nice big moves. So in this case, the stock almost doubled here. So you would expect at some point the stock will consolidate. And that's precisely what it did during this August period. September, more news, they expanded into Europe. So that helped them uptick here. But then, of course, the markets ran into trouble here, October and November. But the stock really held in really remarkably well. I was able to stay with the stock. October, they came out with more news. They expanded their product lines. So all of this is going to be of interest and certainly keep me with the stock. So the other thing I did want to point out to you is you can also use other time periods. I'm going to pull up a monthly here on LFBN. And you can see it's a smaller stock, but the stock is poised to break out of an 18-month base. For those of you not familiar, the longer the base, the longer the stock advance out of that base can be. So I only have one more second before we get into what's hot, what's not. But what I wanted to do from there is show you a monthly chart. And this will give you an idea of an area that Tom's been talking about a lot with NVIDIA and a number of these semiconductors. Some of these, a lot of them, they appear to be emerging out of longer term. This is the semiconductor index. So as we drill down, I can get a little more into that. But really super powerful. For those of you that are a longer term investor, this is ON, a semiconductor stock, and you can see they're coming out of these long-term bases and could potentially be poised for longer moves. And I can show you an example here. But this is Boeing on a monthly. You can see the stocks coming out of a 2-year base, and take a look at that big advance. So I'm going to leave it at that. Let's go ahead and move on and take a look at what's hot and what's not today. We're looking at stocks over the last week that have had significant moves and kind of drill down, take a look at why potentially. The first area that we can take a look at is consumer retail related stocks. And I know that retail sales for December came in rather iffy, but I would argue that that number is skewed. December has a lot to do with certainly consumer confidence during that period, given that the broader markets were down. I think the consumers are still very much at play here. And this is a good example. This is a company called Boot Barn, B-O-O-T, and the stock is up 6.3%, and they came out with earnings this week. So it's all about earnings. They reported strong 42% year-over-year earnings growth, and analysts are upgrading. They're looking for 71% in growth this year. So we can see the stock is in a nice uptrend. I like to overlay these simple moving averages, your 10-day in an uptrend, your RSI. We're a little bit overbought. We're above that 70, but still in good standing. Take a look at another consumer-related stock, and that is RH, Restoration Hardware. And this was a big winner last year, and this big gap up, it's all about the earnings. Of course, it's been a bit dicey here of late, but it's starting to pick up again. Analysts are raising estimates for 2019. They're looking for 175% year-over-year growth. CRMT is CarMart. Estimates are being raised for 2020, and we can see the stock is picking up quite nicely. They're already projected 585% growth for this year. And you can see the stock is up again, another 3.5%. And a nice, we talk about stocks emerging out of bases. This could be a nice potential, a little bit extended there. The RSI is up above that 70, but the MACD is just starting to turn positive. So I would keep an eye on this one. One last one that we can look at. This is one that I had intended to get to last week, and it's iRobot. And take a look at this. This is last week, the company reported earnings. They were up very strongly on that, but we can see the stock is continuing to advance. And we're seeing this year, or this quarter for earnings season, where companies will come in with numbers and continue to advance after that initial gap up. And a lot of that has to do with analysts revising estimates higher. So the company also, in addition to having a super strong holiday season, for those of you not familiar, they have a mobile robotic vacuum that goes around your house, but they're introducing a product for the lawn, so you can sit in the shade on your hammock and have your lawn be mowed for you. But this is another one that is emerging out of a nice, super long base, taking you back to August. And you can look at a weekly chart to get a better feel for that, where it is breaking out. And so it could actually conceivably advance further, even though it's already up well over 25%. The stock does still look quite strong. One last one that we can look at is Mattel. And you can see the big downdraft. This is Mattel. their toy company. But the company, this is all about earnings. They actually popped, this is last week, another one that reported strong earnings. It's all about Barbies, Hot Wheels, but they have a lot of opportunities coming up this year, Mattel, because they have Toy Story 4s coming out, Barbie movies, a lot of, they just signed licensing agreements. So what you're going to want to look for with this stock, you can see this downtrend. I'm looking at a weekly chart. This stock has broken up above key moving averages, but it still has potential resistance. Now we're looking at, I have a better feel here for these moving averages. We did break up above that 200-day simple moving average, and that's going to give the stock a lot more leeway as far as an ability to continue to advance. So I would keep this on your radar. We can move on now to restaurant stocks. That's been really quite strong this week. Bloomin' Brands is one. Oh my goodness, it's up even more today. This particular stock, they have Outback Steakhouse, Bonefish Grill, and a number of others. But this again is all about earnings, and we can see that the stock is continuing to advance beyond yesterday's big move. Let's take a look at HABT. This is Hamburger Habit, a little bit smaller and a little bit earlier, certainly in its potential advance, but they were upgraded to a company called Value Engine. So this is another one when we talk about stocks that are attempting to reverse their downtrends. The stock has broken up above this green 10-day, above the red 50-day. So we're in good standing, but you're going to want to pay attention to its action around this blue 200-day simple moving average. It may find resistance there, but if we're able to break above that, we can see the RSI just turned positive. MACD just poised to turn positive. So this could be an interesting stock. Another one that we can look at, NDLS, and this is Noodles, another restaurant stock. And it's a turnaround story, and another down and out stock attempting to turn. Doesn't seem to have as much power. I'm not seeing the volume, so this really is not as interesting to me, but they are going into positive earnings after about a year and a half of negative. We can take a look at one last one, BJRI, and this one, estimates are being revised up. They're due to report next week. So a lot of these restaurant stocks down and out and potentially trying to turn here. This one's not participating in the rally today, so that certainly does not bode well. Let's take a look at another area of the markets that has been doing well this week, certainly, and over the near term. We can look at the group graph, and that's going to be energy stocks. And this has everything to do not only with the price of oil that has been picking up. With StockCharts.com, you can type in WTIC. This is going to give you the price of oil, and we're really hanging in here above this 55 level. I've talked in the past about the fact that oil prices above 50, these energy companies are telling us that they can conceivably make a profit. So hovering around this 55 level is quite good for a lot of these energy companies. The first one we can look at is Marathon Oil, MRO. We can see this gap up here on volume. They came out with earnings yesterday, slightly ahead of estimates, but management commented that they have systems in place. They're looking for more upside if the price of oil continues to firm up. Now, this is another where we're looking at that potential turnaround. We're up above these key moving averages, but again, we're going to want to pay attention to what happens up here. Your RSI is positive. Your MACD just now turning positive. We can take a look at DVN, another energy. They're due to report earnings next week, but analysts are revising estimates up going into earnings. We can see this 200-day is quite a bit further. So as far as looking at potential upside, we're now trading at about 28. We could conceivably see a continued move up. RSI up above that 50. And we can see that down here, the MACD is also just turning positive. And then one last stock that we can take a look at in energy, and really you can drill down to quite a number of names because they're all having a very strong, solid week. This particular company is Apache Corp, and they recently announced a reduction in their caps expenditures spending and their budget. So they reported their earnings actually back here in November. So this move is not earnings related. It's more management coming out talking about how they have constraints in place to keep and continue their growth. So a lot of these energy stocks coming out of really depressed areas. Let's move on. Tom talked about semiconductor stocks, and that certainly has been a very vibrant. We're starting to see some of these companies report this week. Take a look at LSCC. The stock up 44%. Now it's giving back a little today, but I would argue that the buyers are coming in on the dip. This company earnings were in line with their estimates, but revenues came in. But really what we're seeing with a lot of these semiconductor stocks is management is guiding higher. For Lattice Semiconductor, they guided higher for Q1. They're involved in the 5G build out with the networks and a lot of applications. They're finding a lot of growth there. We can also look at MU, which is Micron. Now, this company actually reported in mid-December their earnings. We can see that the semiconductor, certainly as well as the broader markets, in a very deep downtrend. So I would argue this is more of a sympathy move. The stocks is so far for this week up about 8.5%, but it is turning, and this is really a bellwether. Micron, there are a lot of eyes on this stock as it supplies to a lot of industries, and people want to see this one certainly perform well with an eye toward a recovery in these semiconductors. BRKS is another semiconductor. They reported here. We can see they came in, earnings and revenues were ahead of estimates, and we can see that we've broken up above this 200-day, and the stock really is in better standing compared to a lot of other semiconductor stocks in the sense that it's quite a bit closer to potentially reaching this prior high, and that is going to take you to 39. It's currently at about 33, so a breakout there would be even more constructive. But we've now broken above all of these key simple moving averages. Your RSI is positive, as is your MACD, so looks quite constructive. And then the last one is NVIDIA, and Tom talked about this particular company. And this, again, is indicative of what we are seeing. The earnings weren't so great, but the company is forecasting a very strong second half rebound. And it's similar to AMD. A number of these semis are looking out over the horizon for a potential second half of the year that might be super strong. So we can see this. Yeah.
Yeah, Mary Ellen, I didn't mean to cut you off. You have anything else on NVIDIA? I know you're going to talk about asset managers. And one of the things I wanted to show, if you don't mind, I'll just pull the chart up for a second, then I'll let you have the screen back. But I wanted to just point out just for a second that the asset managers, you know, if you think about it, the stock market, when it does well, you would think asset managers would do well. And so I did a long-term, this is a 15-year chart of the asset managers relative to the S&P 500, and then how that correlates to the S&P 500 itself. And you can see that the direction of the relative strength of asset managers tends to coincide with the direction of the market. Not always, but for the most part. The reason I point this out is that back in 2009, when we had our first big move up in the market after the bear market, you can see the relative strength of asset managers was incredible. If you go back to 2012 into early 2014, we had a huge move in the stock market, and you can see asset managers outperforming. And then again throughout the latter part of 2016 into 2017. My question here, though, and I know that asset managers have been strong here just recently, but on a relative basis, you can see that asset managers really have not been good performers. So I think it's kind of interesting that we're starting to see this group pick up, and maybe you could comment on whether or not you think this is something that could be sustainable given the way the market's been performing.
And Tom, actually, you are bringing up a very good point, because what you just witnessed there was the deterioration in a number of these asset management companies. So let's take a look at one of the better known, T. Rowe. Let me just see if I can pull up that ticker symbol. This is one of the larger asset management firms, a lot of mutual funds, T. Rowe Price. So what I was pointing out for this week is the fact that we are starting to see a little uptick here in some of these names. And basically this big decline, certainly during this period, is during the difficult, certainly October through year-end period. A lot of these asset management firms saw huge outflows, investors exiting, going into either fixed income or to cash. So that's what this uptick here that we're seeing, as a for instance here, is the company had 8% growth in AUM. So investors are coming back into the market, given the rally that we've seen, certainly up well over 10% in the broader markets. So so T. Rowe Price is a good example. BEN is another one. This is certainly well known. Franklin Resources, a little bit more positive looking, we can see, but this is another one that is reporting increases in their assets under management. They're trying to turn, so it's up about 7% now for the week. So we could well see a nice pickup in some of these as their assets begin to now this is AllianceBernstein. They really didn't fall with the broader markets, but some of those down and out names that are starting to potentially turn could be very interesting. So yeah, so another strong area this week has been software stocks. Let's take a look at CyberArk. Those of you that follow my work with MEM Investment Research, this has been on our suggested holdings list, and it gapped up super nicely, up 17% on very solid earnings, 117% year-over-year earnings growth, 200+% ahead of estimates. So this particular company, they do cyber security, and there have been studies done. It's a huge growth industry because it's viewed as the next potential area of attack. The U.S. military came out with this study, and they are suggesting an increase in the need to secure cyber assets. So this is a prime example of a software company that helps with that. Let's take a look at another software company. This is TYOU. It's 2U. And I wanted to point it out. The company is an education software stock. It's up about 12% for the week. And they announced business partnerships. It's a global company. They announced a business partnership with Latin American business leader to provide MBAs for professionals. But again, we're looking at a potential turnaround. We can see this big deterioration here. The stock is really quite volatile, not one that would particularly attract my attention, but it's really experiencing a significant move here. Again, we're going to want to see how it behaves here at this 200-day. It is certainly near term a bit overbought, but let's take a look at WIX. This is a company you may see. They advertise quite a bit. They help provide websites for small businesses, and we can see this nice move. From my work, I talk a lot about stocks potentially emerging out of bases, and this stock is poised to break out this week out of a nice 4-month base. Very constructive. Earnings are due next week, and we can see that the RSI is trading positively, as is the MACD, and certainly this is a very attractive stock. They're continuing to add new product lines and attracting investors' attention. Industrials having a very big week. We can look at XLI, and this is very simply the industrial index, up over 3.5% this week. Let's take a look at some of the industrial stocks, some of the better performers. Really, I could have gone on quite a bit with industrials, but this is an example. Zebra, ZBRA, and they're up 12% for the week, all about earnings. They came in with 20% ahead of estimates, management guides higher, and analysts are raising estimates. And this is another example of a stock that is breaking out. I'm going to pull up a weekly to give you a little bit more in the way of perspective. And you can see that it's breaking out of that 180, breaking out of that nice base. Take a look at the volume. You like to see that volume. RSI trending upward. Now, of course, it's had a significant move, but it does look quite healthy. We can look at VMC. This is another kind of building related stock. And this is another one all about earnings. They came out ahead of earnings and revenues. So we can see the stock is up almost 9%, potentially forming the right side of the base and reversing this downtrend. This is a weekly chart. We're not quite there yet on the MACD, but certainly your RSI just trending upwards. So I would keep an eye on this particular stock because it could, again, continue to advance and potentially continue to form the right side of that base. And let's take a look at, there's so many areas that really picked up this week, more in the way of building materials, TREX. These guys do decking. And we can see this one is also potentially forming the right side of this base. Estimates are up for 2020. And year over year, we're seeing a lot in the way of potential growth. Take a look at this RSI trending upward, and then also your MACD just turning up. So this one actually looks really quite good. And one last one in this industrial is a roofing stock, BECN, Beacon Roofing. And this particular company, it's up 8%. They just reported, but their earnings really weren't that positive. It was all about their guidance, and they are still attempting to turn around. I would not touch this stock, even though the RSI is trending upward. The MACD is not quite positive yet, but we have this downward trending 50-day where the stock could very easily find resistance. I'm just going to spend a minute here and take a look at a couple of medical stocks that really did well this week. TNDM is Tandem. And this is a diabetic care. I've been really keeping an eye on this one because the stock, let's take a look at the daily. The stock was up over, actually was up over 1,500% last year. So a super big winner. They have products that are in high demand, but we're looking at a daily price chart, and this stock is just now emerging out of a very long 5-month base. We're getting a nice pickup here in the volume, and the stock sales have really been explosive. 71% year-over-year growth last quarter. They're due to report later this month, but I would keep an eye on that stock. The last one in this space, ZTS, the company reported earnings and sales that were ahead of estimates. So the stock is up about 8.5%. And this is all about people spending money on their pets. And they have products to help with pets that have anxiety and so forth. So big growth story there.
Yeah, I was looking at ZTS actually earlier, and I saw on a weekly chart that it had broken back up above its key moving averages. And now, as you can see on the daily chart, they're threatening that overhead resistance between 95, 96. But this would be, after consolidating for the last several months on the weekly chart, this would be a really nice breakout, I think, on ZTS. But I know you've got some what's not hot or what's not.
Yeah, there actually are a couple that weren't doing well this week, believe it or not.
Yeah, I know you found them. So
they're there. I uncovered. But Tom brings out a very good point. It's poised to break out of a nice 3.5-month base, the CTS. So keep an eye on that one. On the negative side, a couple of names. First one that we can't ignore. I'm sure Tom touched on this earlier this week, perhaps, but this is Coca-Cola, and the company dropped about 8%. And that is a big drop for this stock. Their revenues dropped. The management came out. They talked about currency, the negative impact of currency exchange rates. And the reality here with this stock is investors really fear that what we've seen with Coca-Cola is a decline in their volume. The outlook for sugary drinks has diminished. So they did just announce a new product last week, a vanilla orange product. But again, overall, they are seeing declines in growth. And what they've done is they increased their pricing, and a lot of that was able to help them sustain, but they've already done a lot. They don't have a lot of their tool belt is exhausted, if you will. So there's a fear, if you will, that their growth prospects are not that strong. We're going to see if it holds this 200-day, but this volume is really quite telling, and the stock is down again today. Another area that we can take a look at is retail apparels. This is going to be all about earnings. Canada Goose, this is one last year, another big winner, big earnings. They came out with numbers and they beat estimates and they raised guidance higher. Revenues were up 54%, soaring growth, but analysts found fault with the company's their gross margins, which reflect higher labor costs. So there's a fear that they are not going to be able to sustain this strong growth. Take a look at that volume. This is similar to the upside. When you see this big volume, the stock broke down below that 10-day, below the 200-day. That's your blue line. It's really does not look good. The stock is down again today, so it could very well have more selling ahead of it. We can take a look at another stock that is in that retail space. This is AEO, American Eagle, and there are a couple of companies that have reported or declared bankruptcy this year. So Charlotte Russe on February 4th, that's another retailer. Gymboree back January 14th. So these are two recent, we may see a company such as AEO join the ranks. I'm not making any predictions here because actually their earnings are quite significant. They saw 27% last year and 11% growth is projected for this year. So this would not be certainly not a candidate for bankruptcy by any means. But here's Chico's CHS, another stock that's down this week. And this is all about negative earnings. They were down, they're looking at almost 60% negative earnings growth for this year. So this is really quite a depressed looking stock. And let's take a look at another area. Some of these telecom stocks got hit this week. Certainly one of the hardest hit is SWIR. And this is Sierra Wireless. Take a look at this gap down. Stock is rebounding a bit, but it's probably down about 20% on this. Again, big volume. They announced earnings that were below estimates and they guided revenues lower going forward. So this really has been a rather depressed stock for quite some time now. And yesterday's drop is even more bad news. We can take a look at AUDC, which is another telecom related stock, down about 12% audio codes. And this particular company, estimates have been revised down for the first quarter to negative 15% year over year. So the other thing that we can take a look at with some of these stocks as they pull back, we're looking at a daily chart. Really, the stock had quite a significant move. You would certainly anticipate at the very least a pullback, but what we're seeing is a little bit more. That RSI, we're looking at a daily chart, is now negative. We've had a negative crossover, that black line down through the red, and we can see this significance going back historically here to that November period. Very similar dynamics in play, so more potential downside there. We can take a look at AMX. That is another telecom related. And this is the large Mexican telecom company. Another earnings story. They came out and disappointed, huge gap down. This particular stock, this company was trying to stage a turnaround, but certainly with this drop, we can see the big volume. The stock has broken now below these key simple moving averages. So it's going to take a bit for this company to potentially reverse. And then CTL is CenturyLink. And this one, as you can see, has been actually, it's up about 8% today, so very interesting. They came out with numbers, earnings were okay, but the company announced yesterday that they were cutting their dividend in half. And so it struck the stock. It was down 10%, but it's very interesting. I'd love to see what the news is to see that the stock is rebounding here today. But certainly overall, it's not an attractive stock. This downtrend very firmly in place. One last one in this area, we can take a look at Netgear. They came out with good earnings last week, but what happened on Tuesday of this week, Amazon announced the acquisition of a competitor to Netgear. And so two things happening here. Now Netgear has to compete with Amazon in their product space. Also, it takes off the table the possibility of Netgear being acquired by Amazon. So we had this big gap down. I've talked about this in the past. It's called a hemorrhage. The stock is now wedging. It's in a back and fill motion up. 80% of the time with this hemorrhage and wedge pattern, you will get another leg down. So one last area that I can take just a minute is some of these insurance stocks that got hit, and it's all about all the natural disasters that we've had this year. So the first one we can take a quick look at is AIG, missed earnings due to their catastrophic unit. The company reported underwriting losses of $1.1 billion. Hurricane Michael, California wildfires, all impacting not everyone, but certainly select ones. Here's CNA Financial. Another one came out with numbers. They reported Q4 losses, revenues lagged, and again, because of these natural disasters. So we can certainly leave it with that.
Yeah, I mean, great job. I also will, as far as the insurance, life insurance, I mean, we could take a look also at, or maybe some of our listeners could just pull it up on their own, but Aflac has been incredible recently. I know among the large cap life insurance stocks, I think it has the highest scooter rank, and life insurance has not been very strong, but it is trying to break out today. And Aflac, I think, has a scooter rank of maybe 74, so it is up above that 70 level. It's been increasing, and
wow,
really had a nice rally off of that late December low. The stock was down around 42 and a half, and now it is up at about 49 and a half, and at some recent highs, which is unusual for those life insurance stocks. Okay, there you go. A lot of stocks. I know you covered a bunch there again, Mary Ellen. Congratulations. Really appreciate that.
Sure.
Let's go ahead and jump into the 10 in 10. So the 10 in 10, of course, that's where I try to annotate some of your stock requests and show you how easily you can annotate and save those into a chart list here at StockCharts. So let me pull up the first stock, which is FedEx. And here we go. So FedEx, I'll be honest, I don't like what's going on here with FedEx. A couple of things. Number one, you can see the massive volume that took place on the selling in December. So I think there were a lot of institutions bailing on FedEx in December. The rally itself, even though we have rallied, it looks pretty good, bouncing from 150 over 180 on a relative basis. Look at what's going on here, FedEx versus or its peers in delivery services. FedEx has been an awful performer relative to its peers, awful relative to the S&P, and its peers have been awful relative to the S&P. FedEx is a great company, but I don't believe now is the time to be getting involved. In fact, I drew a couple of support levels here. If I owned FedEx and I could not hold this 174 to 177 area as far as support goes, I would be really careful, because this is, again, money that has been rotating away from FedEx and into other areas of the market, even other areas within its industry group. So I'm just not a big fan of FedEx here. I think it's got more work to do. A breakout above that 186, 187 level with increasing volume and seeing the relative strength lines begin to turn up would be a bullish sign. Until we get that, I would be careful.
Okay, we can look at, how about Facebook?
All right, Facebook, I was able to, I think this is the most popular in the chat room, and I was able to annotate this one ahead of time as well. Facebook had the nice gap up with earnings. I'm beginning to wonder, though, whether or not this is going to stick. I would watch that rising 20-day moving average. A lot of times when you gap up well above the 20 and you pull back, that's a key area of support. If we don't hold it, I think we could go back and fill the gap down around 150, and that would be about a 7% decline from where we are right now on Facebook. Something to think about. Now, internet stocks have started to turn back down again. They have not broken out the new highs. We're seeing a lot of the market take out the early February highs. That's not the case with internet stocks. And Facebook, relative to the internet area, has been trending lower. So while internet stocks in themselves have been weak on a relative basis, Facebook has been one of the weaker. So you want to be careful here if it doesn't hold that rising 20-day moving average. Here you can see Facebook turning down over the past, 10, 12 days or so relative to the S&P 500. And this is where you can see that internet stocks have turned lower on a relative basis. We're way off of that relative high that we saw in internet stocks back in July. So I would be watching the support levels I gave you on the absolute chart, but I also would be watching these relative strength lines. Facebook relative to the internet group, and Facebook relative to the S&P 500. If we fail to hold these lines at the same time, we fail to hold some key support levels, I would look elsewhere in the market in general and in internet stocks more specifically.
Very good. AT&T.
All right, AT&T. Haven't been a big fan here. Might as well look at this one on a relative chart as well. When you take a look at the group, of course, AT&T for the most part is the group, but the overall group continues to go down. So, of course, AT&T is struggling as well. We haven't been able to get back through key gap resistance. So that's the thing I'm going to focus on here. Let me go ahead and pull up the support resistance line. Here was the gap down. Check out the volume and notice where we keep failing. So we're just kind of going sideways. If you're in AT&T for the dividend, that's one thing. But if you're in it for growth, I think there are a lot better opportunities out there. Let's wait and see if AT&T can clear, say, 31.25 to 31.5. Until it does that, I'd be looking elsewhere.
And then Tesla.
All right, Tesla. And I know we've had questions on here. You know, Mary Ellen, you and I both talked about Tesla a while back, and I think we were both pretty bullish on it when it was making its run back in December. Never cleared the overhead resistance, though, which I did not like, and it's pulled back. I'm still a fan of the long-term chart. I don't know if you have any thoughts that you'd like to share. But
yeah, we can see analysts are continuing to revise estimates down for the stock, but the prognosis for 2020 is really bright. And generally speaking, the markets do tend to look out 6 months. So perhaps midpoint of this year, they might start putting more eyes on that growth that's projected for 2020.
Okay, well, I annotated a couple of lines that I would watch. I think in the short term, you can see once again, huge gap down, very heavy volume. Where did we fail in the rally? Right at that gap resistance. So we need to clear the 50-day moving average and gap resistance, which are coming together very close to about the 325 level. To the downside, a lot of selling was, I don't know, kind of cut off. I mean, we saw buyers step back in at about the 280 level. So I think this is a trading range for now. But I'm not going to annotate, but I did want to just show you the longer term weekly chart on Tesla so you can see what I'm referring to. I think we are in a sideways consolidation right here after a very lengthy uptrend. Tesla made a huge move. Even right here, you can see the stock running from 175 up to almost 400 in 6 months before sideways consolidating. So if we can make that breakout above that 390 to 400 level, I think Tesla's got an open door to higher prices. So I would keep that in mind. But I think eventually this range is going to break to the upside. So I remain bullish Tesla, but I would try to get it as close to maybe some of the support levels that I mentioned, or on a short-term breakout. If we could get a move back through that 325 area right here, or a pullback back closer to the 280, 285 level.
Very good. HIIQ, Health Insurance Innovations.
Yeah, I mean, this one actually had been doing very well. I think, again, if I went back onto a weekly chart and then pulled back, here was the move. I mean, it was in a really nice uptrend. Pulled back. Now it's started to strengthen again. It has gotten back up above the moving averages. PPO trying to get back up above that zero line on this weekly chart. But the volume, I don't know, after moving down, this could just be a move back up and doesn't sustain it. So I'm going to annotate this and say, as long as we can hold above those two key moving averages, then I'm going to be okay here. Let's just go ahead and draw that in. Both the 20 and the 50 are trading, are almost identical, 37.54 and 37.67. So let's say 37.50. As long as we can keep those weekly closes above 37.50, then I think we have a chance to resume the prior uptrend, go up and test the highs up in the 60s.
Very good. And FNV, Franco-Nevada?
Okay, I think that's in the gold mining area.
It is, yes.
All right. Well, short term, I've remained pretty bullish gold. I do like what FNV is doing here off the 20-day moving average. This is one of my trading strategies. If I get an uptrending stock, and here you can see after going sideways, this is what I refer to as a PPO reset at the center line, back at the 50-day, and then we take off again. PPO strengthens. We pull back when we hit that rising 20-day moving average. That's when I would look for some support. Also note that as we pulled back, that prior resistance level I'm sure as if you follow technical analysis, broken resistance becomes support. So when you break through the prior high, that prior resistance, that then becomes support. Look where FNV went to, almost right down to this price support area before turning back up. I think right now we're just range bound, but we're range bound within an uptrend. So I view that bullishly. I expect resistance to be broken, and I expect support to hold during uptrends. So that's what I would continue to look for here with FNV.
Very good. And Nokia, NOK? Nokia?
NOK. All right. Well, kind of a mixed picture. I really like the breakout there. Then it gave up gap support, the 20-day moving average. Held on to the recent low, though. So this one I would say is range bound in an uptrend. So, again, I'm going to give it the benefit of the doubt that it goes higher. But here is your double bottom, which so far is holding. And there was the recent high. So I'm going to say we're in about a 10% range on Nokia. Let's go 595 up to 660. I'd be a buyer toward the lower end of the range or on a breakout above 660. And if I got in at the low end of the range, was able to, and we get up to 660, I would be a seller until it can get through that resistance level. But my anticipation would be a breakout rather than a breakdown.
And then we have MRO. This is one that I touched on with the energy guys.
Yeah, had a really nice move, I think, didn't it? Was that the
Yeah, 12.5 up 12.5% this week on earnings.
Yep. I really like that breakout. So we had the move, sideways consolidation. Probably was not a great relative performer because we didn't have a huge move to the upside. But I love this volume coming in and the breakout. So where would I think about entering? Well, on any kind of a pullback, you've got price support that should come in right at about 1640, 1650. Here was the move through. When I see a breakout above resistance like this, I like to see the volume confirm the breakout. I think that's pretty clear. That's exactly what happened. PPO starting to strengthen. I would look for the price support, 1640, and the rising 20-day moving average to hold as we move down the road. So closer I can get entry to those two levels, the better I can manage my risk.
Super. And then UCTT, semiconductor.
All right. Ultra clean. I see a flag, nice little move up or, flagpole. If you were to squeeze all of these candles right here together, it would be like a flagpole. And then out here to the side, you got a little bit of a pennant, flag, whatever you want to call it. Let's go ahead and just annotate that, see if everybody can see that. So first we've got the uptrend, or I could even shorten it. I don't have to go that far. I could just say from here to here. This could be an uptrend with a little bit of sideways flag action. All right, so the flag, and usually when I do patterns, I use black, but everybody can do whatever they would like. But if you take a move from the high and come down here and connect these highs and then do the same thing with the lows, you can see maybe a little squeezing symmetrical triangle, pennant, flag, whatever you'd like to call it. But to me, this is very bullish. Move up, nice volume, sideways consolidation, volume is dwindling. Breakout above $13 is what you're looking for here.
And then BRO.
BRO. Last one? Is this the last one?
Yes, it is.
Okay. All right. So let's wrap it up with BRO, Brown and Brown. Beautiful move up after a gap down. I'm assuming, this is a stock that had gotten hit pretty hard. Gap down, I'm assuming that was probably earnings related, but it held that prior low and has now come back up and has taken out the reaction high. So I think the bottom is in on BRO, and I would be looking for first some price support, which should be somewhere around that 2850 area. And then also you're going to have the rising 20-day moving average, which is starting to turn higher now. That should offer up some nice support. It already did about a week ago. But nice breakout here on BRO. Pull back to 2850 or so. I like it. And that completes today's 10 in 10.
Very good.
And give you that quick summary. And then we will take another look at the market and see what's going on before Mary Ellen and I move into our final segment, which will be Under the Radar today. All right, so let's take a look at our final market update. And you can see the Dow Jones Industrial Average maintaining its gains, up 342 points. The S&P 500 up 22. The NASDAQ up 28. And the Russell 2000, again, continuing that strong outperformance. It's up, off the top of my head, it looks like it's up probably about 1.6% today. Really, really nice day on the small caps. 10-year Treasury yield continues just kind of drift here. We are up 1 basis point today to 2.67. I really want to get back and stay above that 20-day moving average. Not happening just yet. Volatility index, this is bullish, down 8% today. It is below 15 now after moving down below 16, which it had never closed below in the last two bear markets. If you go back to 2000 to 2002, 2007 to 2009, the VIX never closed below 16. So I think that this is a very good sign for the market that the volatility is drifting lower. It means that the market is not nearly as nervous. It's not as fearful. And therefore, when we get some bad news from time to time, as we did with retail sales yesterday, the market just seems to ignore the news, and the buyers, continually bid up the market. That's typical of a market with the VIX falling down below 15, and especially as we get down closer to single digits. I mean, 10, 11, 12. That is a sign that you're in the midst of a pretty solid bull market. Financials leading today to the upside. Financials having a great day. Banks doing well. Life insurance companies, as Mary Ellen and I were talking about earlier, also doing well. Mortgage finance doing well. A lot of areas within financials doing well, which is good. Energy also performing well today, up at 66. You can see going back the last couple months, we haven't been at 66 on the XLE, which is nice. Industrials continuing to perform extremely well off of that December low, and healthcare bouncing off its 20-day moving average, moving to a new high. And then, of course, two of the stocks in the news today, NVIDIA and Deere & Company, both reported. You can see taking a little bit different routes, NVIDIA gapping up and Deere gapping lower. All right, Mary Ellen, it is time for us to get into the final segment. We got plenty of time today, but under the radar, and what we want to kind of do here is take a look at stocks that, for whatever reason, we believe that maybe these companies are under the radar. Folks out there aren't aware of them, and we're going to share our thoughts on these stocks. So what do you have for today, Mary Ellen?
Yeah, that sounds great. I have a couple of areas, and I'm not going to cover a lot of stocks. It's going to be conceptual as well as stock focused. So this first one, actually, this is not my first pick. I wanted to just lead with taking a quick peek at Kronos. The first two picks are going to be marijuana related, and it's certainly a big space. So let's take a look at, for instance, CGC came out with their earnings today. So that's really putting this space back into the spotlight. This is Canopy Growth, and they came out with numbers that revenues were ahead. But what I wanted to point out is the real vibrancy that's in this market as companies continue to come out, whether it's with new products or they're joining forces with large established firms. So it is an area to be certainly reckoned with and looked at. So the first stock that I wanted to pull up in that's related to this space is a stock called IIPR, and it's Innovative Industrial Properties. And some of you might be familiar with this stock, and I'll tell you why. It's had a huge, let's take a look at it on a weekly, and you'll see the big move that it's had here. The stock is a real estate investment trust. It's a REIT stock, and what they do is they have properties that they lease to experienced state licensed operators for medical use cannabis properties. So we can see that the stock here has been in a very nice uptrend. Took a little bit of a dip here yesterday on volume, and let's go ahead and take a quick look at, I'm going to show XLRE is the real estate investment trust, and I'm sorry, the real estate sector, and it does have real estate investment trust REITs in there, and we can see the nice significant move that these REIT stocks have had. A lot of that is interest rate related. Tom talked about the yields dropping, and many of these stocks offer a nice premium as far as significant yields, so a nice treasury alternative. But also a lot of these companies are having high occupancy rates, and they're seeing growth. So IIRP is not a big, it's a 2.2% yielder, but it was one that I thought individuals might not be aware of, and is certainly worth taking a look at and keeping on your radar. That uptrend looks really quite very much in place. People are coming in. The stock's up 7.5%. Buyers coming in on that dip, keeping that uptrend intact. Let's take a look at another. This is a really small, another cannabis-related stock. There are really quite a number that you can look at, whether they're OTC or not. This particular company is CVSI, is the ticker symbol. CV Sciences. A little bit sleepy in here. It's not doing a whole lot. But the reason I pointed this one out is because the company was founded in 2010, so it's a little more established than some of these newer companies. They're U.S. based. And what they do is they develop and produce and sell raw materials and consumer products containing CBD to beauty care, pet care, specialty beverages, all very strong. So we can see that the stock really has been consolidating more than anything back in here. We're looking at a daily chart, and it was starting to pick up here at the end of December, pulled back quite nicely to that 50-day simple moving average. RSI beginning to trend up. Your MACD is up above this net neutral. Not as alive, because when we look at stocks, this is the kind of move that we want to be on the prowl for. So at this juncture, it's really just kind of sleepy. I would just put it on your radar with an eye toward this type of a breakout and a nice pickup in the volume. But that was another stock. They have a product that's in development right now. It's a chewing gum to help people quit smoking, CBD based chewing gum. So keep an eye out for that one. Let's take a look at another. This is a small cap. We're moving on to a different area, NEO, and the company is a small cap medical stock, Neo Genomics. A lot of you might not be familiar with this one. This one was brought to my attention by a hedge fund that I work with. They are super well versed in medical services and medical products. But this particular company, they're due to report next week. But what they do is they operate a network of cancer-focused genetic testing labs in the U.S. They're looking for abnormal chromosomes, so very much in high demand. And we can see this gap up here in, this is taking you back to January. The company actually came out with a product that they're going to be doing chromosome testing for new chemo cancer-related drugs. So very nicely received the news. We can see this gap up, pushed the stock back up above these key moving averages. So what we're looking at here is the stock that's in a very confirmed uptrend. It's trading up above this upward trending 10-day simple moving average, RSI, trending upward, and your MACD up above this 0. But from my work, the stock, even though it's had this significant move, it still looks very constructive. It's poised to break out of this nice 3-week base. So a lot of time, 3-month, we can take a look at a weekly chart to give a little more in the way of perspective. And I want to blow this up a little so it's easier to see. So we talk about stocks. Let's go back historically into this 2017-18 period. Very similar to many stocks, as they break out of these longer bases, they have a nice advance going out of that base. This is not quite as orderly given the deterioration in the markets at the end of last year. But again, it is poised to potentially break out of this nice base with your RSI and MACD trending positively. And then the last one that I wanted to take a look at is another smaller stock. But before we get into it, I want to show a larger, somewhat of a competitor. They're somewhat in the same space. MTCH is a stock. It's called Match Group, Match.com. And they are all about using social media to help people connect. Match Group, if some of you may have heard of Match.com, there's Tinder. These are social media mobile apps that individuals can meet up with other people. So what I wanted to point out here is the nice significant move that this stock has had overall. There's real demand for this type of product. So the one I'm going to share with you today is quite a bit smaller. And a lot of people might not be familiar with it. It's called the Meet Group, and it used to be called Meetup.com. And this particular stock is about a $400 million stock, quite a bit smaller, but they have a live streaming video platform, and it's called Meet Me, and it's for individuals to, again, connect. Casual chats, friendships, dates. People have talked about meeting on this site and actually getting married. So another stock that is emerging out of a very long base. This is actually 18 months. We're looking at a weekly price chart here, and the stock had a bit in the way of growing pains, but has been able to reverse, and it is actually poised now. It's a little bit smaller. It's about a $7 stock, but it is, again, looking rather constructive on a longer term basis as far as this uptrend and potentially continuing this nice upward move.
All right. Sounds good. Certainly appreciate those. It gives everybody some things to think about for sure. I'm going to go ahead and take a little different approach. I am going to show first, I had mentioned a couple times in the show, and I've been talking about it recently, how small caps have been outperforming. So I want to take you first over to this relative strength chart on the Russell 2000 versus the S&P 500. And yesterday when I was on the show, I was talking about how I really struggled last September with my trading. And one of the things I was looking for was small caps to outperform the S&P 500 back in September. And you can see that they did anything but that. They actually went the other way. So I had a number of small cap stocks that were getting stopped out. Well, look at what's been happening in 2019 so far. This isn't telling us that the Russell 2000 is going higher. We already know it's going higher. This means that it's going up faster than the S&P 500. So this is taking the Russell 2000 index and dividing it by the S&P 500 index. That's what the colon between the two symbols does. And so this is telling us on a relative basis, small caps are getting a huge amount of money that's flowing into U.S. equities right now. And this is important because I think this is a sign. Why would small caps do well? Well, small caps would do well if the U.S. economy was expected to be stronger than foreign economies. So that would be the reason why you'd want to load up on domestic companies. So even though, we might question the economy, and I do, when I look at the 10-year Treasury yield, for instance, this right here, this relationship is telling me that the market likes what it sees going forward, and they want to be in these smaller companies because when the economy is expanding, these smaller companies can grow their earnings much, much faster than the larger companies on the S&P 500. And if the dollar is strong, the Russell 2000 isn't impacted by the stronger dollar, whereas the S&P 500 is, because those foreign profits, S&P 500 companies are multinational companies. When they make money in foreign countries, you have to translate those profits back into U.S. dollars. And when the dollar is strong, that reduces those foreign profits. So there's a couple of things that, when I see this, I want to be aware of. So my under the radar is going to focus on mostly small cap companies because right now that's where the money is going. So let's take a look at a couple. And I have a scooter rank over here. And for those of you that don't know how to get to this, let me just show you. From your dashboard, you go over here into the member tools and just scroll down right below in the reports and analysis tools, right below sector and industry summaries, scooter reports. Click on that. And then when you go up here, the menu, drop-down menu, you can get this for small caps. So it will rank all of the small cap stocks for you in scooter order. So they're being ranked versus one another based on their, technical outlook, based exactly on what's going on in their charts. So it only takes into account the technical price action, does not look at fundamentals, doesn't look at how many earnings estimates are being raised, anything like that. It's just strictly based on technicals. Now, you're going to find a lot of the top of the leaderboard being littered by biotech companies a lot of times. Here, you can see a bunch of them. They're not quite at the top, but if biotechs were doing better, you'd probably see almost all of them as biotech at the top. And the reason is there are a ton of biotechs, and there's a lot of volatility in them. So if you get a couple that have been really hot for a while, they go right to the top of the leaderboard. But I may have one or two of those in here. I think the first one, AGRX, actually that's a pharma. Looking down, there might be a biotech in here. Anyhow, I'm gonna go through and just point out some of these I think look interesting that I believe could be under the radar because you may not know about them. You may not know that the Russell 2000 small caps have been so strong. But let's take a look at some of these charts. So AGRX, if I go out, stretch this out to a year, I think maybe this will come into focus a little bit better. But you can see that the huge gap down here, notice all these failures at about $1 to $1.25. So this is a good stock for those of you like to play the small, really small dollar stocks, looking for something that could be exciting. Well, this is a company, AGRX, that's getting very close to a big breakout, looking back the last several months. And it is one of the better performing stocks in terms of scooter rank on the small cap list. So something just to keep in mind. AGRX looks interesting, but it is going to be volatile. Diebold, and I don't know, Mary Ellen, if you had any chance or maybe have some of the data there. I don't know if their estimates were raised or something, but I looked at their earnings report, and the earnings weren't that good. They actually, I think, posted an adjusted loss of 8 cents. Market was looking for flat, so they actually missed on their earnings. I think they beat on their revenues, but look at the reaction that they got back on Wednesday after their earnings report came out. So here's a stock that had been under a lot of pressure recently, but look at the volume coming in on this move back to the upside. I'm just thinking maybe if we could clear this gap resistance, and perhaps maybe we pull back first, but if we clear that gap resistance, this is one that looks like it could run. Do you have any info on this?
Yeah, I guess that they came in, revenues were up about 3%, but they came out, management came out, and I guess there are some favorable trends within the company, possible turnaround in the near future. So they're cutting costs and they're taking action. Their expenses are under control. So the company's they're looking for sustained profitability. So it's a turnaround story, really.
Okay, cool.
Yeah.
I knew I could count on you. I knew you right at your disposal.
That's it.
All right, let's keep going. We got AGEN. This is Agenus, which I think could be a biotech. Let me pull this up on a relative basis. But AGEN, yeah, it is a biotech. You can see that the strength, though, has definitely been building here. Look at the volume coming in. The only thing I will caution you about, not just the biotechs, but any small cap stock, is they can move pretty quickly to the upside based on promises, based on expectations. And if they can't achieve them, they can come back down really fast. So the small caps do give you a certain element of risk that you don't see in some of the larger cap stocks, just to keep that in mind. But AGEN, after making a big move and a breakout on heavy volume in mid-January, it looks to me like we're getting a little bit of a cup here. I mean, I see this as a very bullish sideways consolidation, volume coming out of the stock. I would expect that the next big move is going to be to the upside here on AGEN based on this chart. Let's move on to Zixi, Z-I-X-I, which is a software. This is Zixit, software stock. We've talked a lot about software. Mary Ellen talked about software earlier being hot. This is one of the best ones out there. I know it's small cap, again, a little bit scary, but look at the volume trends on the stock over the past 3 to 4 months as it's risen from $5 to $8.50. And going back and looking at it on a relative basis versus software, huge push to the upside. And of course, software overall has been a really strong area. So I think ZIXI, if you haven't heard of it, well, that's why it's here on Under the Radar. If we pulls back and maybe gets a 20-day test, maybe somewhere below $8, that could be an interesting level for possible entry. Just a couple more here. Let's take a look at GKOS. This is another one with a huge gap up. Now, this is a medical equipment company, but here was a huge gap up with heavy volume in August. Came all the way back down. Well, not all the way back down, but came down for a while. Has turned back up here in 2019, and it has risen from just above 50 up to almost 70. And look at the overhead resistance sitting here right at 70. So this is one on the verge of a very significant breakout. It's going to need some more volume. But as it gets close to this breakout level, you can see, first of all, medical equipment has been strong. And look at GKOS on a relative basis to its peers, just simply waiting for something that catalyst to get that breakout on a relative basis. I think GKOS is one sitting right now under the radar. Another stock within that medical equipment space is NVCR, which is Novacure. Another one, very strong 2019 so far, good volume, right up against resistance. But I was looking at the weekly chart, and I know you looked at some of these earlier, Mary Ellen. When you get this pullback and consolidation, and now we're starting to strengthen again, I don't know, off of a long term, this looks like a nice uptrend followed by a cup, and then maybe a little sideways consolidation. I'm expecting a breakout here on NVCR.
Yeah, looks good.
All right. I'm going to go ahead and just stop it right there because we do have a poll that we want to go over here in just a couple minutes. And then if we have time, try to answer a question or two that came out in the room. But there is your under the radar stocks. I didn't pull up Denny's, but DENN is one that I think came out with earnings, held on to recent support, and then started to bounce here yesterday and today. So that's one maybe also to keep an eye on. But let's go ahead and pull up the poll. And the question was about relative strength. And I know just about everyone that comes on the show, just about every guest we have, talks about how important relative strength is for them. And I know it is for me. I think it is for you as well, Mary Ellen, going into
yeah, it's a big element, big part of my work. Yeah.
Yep. I mean, I know if I answered this, I would go extremely important. How would you categorize your thoughts about relative strength?
Yeah, extremely. If there's a more emphatic word.
If there was one a little bit stronger, you'd go with that one.
Yes.
Very funny. Well, I'm glad to see 91% of you out there that answered the poll, 92% now, either view it as important or extremely important. If you're trading, you want to be, especially if you're a momentum trader, you want to be where the money is going.
Mm-hmm.
I mean, I don't know how else to explain it, but the money rotates. Just because the stock market's going up doesn't mean everything in the market is going higher at the same rate. Money is always, analysts are going out visiting these firms, finding out, what's making the company tick, and are they ahead of schedule? Are they behind schedule? What new products do you have? How about your competition? They get all that information that you and I can't go out and necessarily get from these firms. And then they go back to their firms and they either help their clients buy into these companies or sell. And so we see it on the charts. We don't have the benefit of picking up the phone and calling management of these companies, but we see it on the charts in terms of relative strength. I think it's incredible.
And I'll tell you one other thing that they do, the professional money managers, they put together these watch lists. They go out, they meet management, they get the stories, then they have a watch list. And once the chart starts to confirm what they know fundamentally, then they're in there buying. And it is going to be, relative strength is going to be part of that.
Yeah, no doubt about it. Well, I'm going to pull up a chart here in just a second, and it's just a refresher of one I showed you just a little bit ago. But I think it does illustrate how important relative strength can be in terms of your trading. I mean, knowing when to get into something, when to get out of something, that might be even more important. How quickly you can get out of something. But when I pulled up that Russell 2000 chart relative to the S&P 500, I think it was pretty clear that money is rotating into the Russell 2000 on a relative basis much faster than it is rotating into the S&P 500. So I know that was a chart that you had taken a look at earlier. So not really any need, I guess, to go ahead and pull it back up.
Oh, again. Which one?
It was the Russell 2000.
Oh, yeah, absolutely.
But showing that, I think, was really, really important just to see how money can rotate back and forth.
Mm-hmm.
Okay, well, we are getting close to the end of the show. I do just want to give you one final take on the market. The Dow is kind of sitting where it has been the last couple hours, up about 322 points, all really across the board, market continuing to do really well. So I want to thank everybody for joining us today. Also, great big thank you to Mary Ellen for preparing all that information for us on the what's hot, what's not. She does it every week, does just an absolutely magnificent job.
Oh, thank you.
Yeah, we'd love to get feedback on that, by the way. You've got a survey below the video player. fill it out and let Mary Ellen know. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Be safe this weekend.